All right, on this Valentine's Day, I'm going to cover something I got wrong because I love to be wrong on Valentine's. Not on Valentine's Day, but you have to love to be wrong or you're not going to admit it. Right in here was, where was it? All right, so I was bearish in here. All right, and I thought we could break these swing lows that would also break and move away from these swing lows and also these guys from early overnight. And that's fine. I didn't sell it in the hole. Let's get rid of some of those hearts. I didn't sell it in the hole, but I let it come back to me, and I had a qualifier. There's nothing wrong with that. Some buying came in, and we slightly got it below it. Remember 75 3/4? And once it got below it, it didn't go lower. It went higher. Let's take a look. Right there. There was something in the news, and I don't want to blame it on the news, that was maybe a little bullish. But either way, took a loss, not a big one. The problem was I didn't get back in as soon as I wanted to. So it had to go up a little higher than I would have thought, and then it comes off. So I was early, but wrong, took a loss, and couldn't get back in for the break, which eventually came off. Now, the overnight low was 72 even, and eventually we're going to take that out, talked about it. And once we did, 70 had a lot of good support for a couple different reasons, and you had to cover a short if you were short down there, or at least not be as bearish. And the other thing that was important is 72s should have held if it was going to stay bearish, and once it didn't, take a look at the bottom right, the market then had to stay below 74. When that got taken out, before this big long up bar, you're scratching your head that why can't the 72s hold? Why can't the 73 halves hold? Those were real-time moments that begin to allow you to read the real time and strip out randomness. Remember, the thing that makes us most fearful is the unknown. So you want to read the real time and be okay if you're wrong, but have a sense of why the market's doing what it's doing. The other thing that was important in today's market to understand as we're trading was that there weren't going to be a lot of big moves. They were going to be interrupted with some sideways trades. So we get, in this case, you get a big move up. Either you caught it or you didn't, but don't expect it to come down and then shoot back up real fast, because that's not going to happen. It was a slower day, lower volume, not low volume, but lower volume coming in, a tighter range overnight. It's Friday, and it is what it is. But that's kind of what happened as far as the market moves, chops, and so on. And then we had a great level at 74, great level at 80.50 that called the top and told people, if you're long, don't be a hog through here because it's going to be the top. It's going to come back to 79 and then try to figure out what it's going to do from there. So again, the highlight to summarize is it's okay to be wrong. Admit it, move on. You're going to take losers. It's like a marketing expense for a business person. It's like an employee's check. You got to, they're valuable. They're helpful. You don't look at paying them as a problem. It's a reward. Losers are rewards as long as you admit them, take them, and move on. Rearview mirror stuff. Even though today is Valentine's Day, and this metaphor doesn't always fit, but I'm going to have to say it. Maybe it'll stick a little bit better. But trades have to be like one-night stands. Don't marry trades. Don't call the trade back. Move on. You could review it and look at it, but you're not to hang on to it. That's the point. When you hang on to trades, that's like calling the girl back, calling her back, and she doesn't want nothing to do with you. You're wasting your time. Don't hold on to trades. Know where you're going to get out before you get in. The old second trade first. And someone asked me, what does that mean, second trade first? When I was learning how to trade in the late 90s from the floor, and this guy asked me this, and I'm glad he asked me because I want to tell people that might have heard it in the interview I did. The second trade first means the first trade isn't necessarily buying and selling, opening to close to the close of the position. The first trade is buying it, let's say. The second trade is selling it. to cover the long. But let's separate those into two trades. The first one, back in the days of the floor, you had to look at someone and buy it, right? That's one trade. Then to get out of that long position, you had to look at someone and sell it, right? You did it with two different people. So consider two different trades. Second trade first meant, where am I getting out of this thing after I get long? Know where you're getting out before you get in is the same thing as second trade first. Good luck. Have a nice night. Tell someone if you love them that you love them, but genuinely, not just on today. Every day should be Valentine's Day. It's the way I treat it. And if you're going to shoot your spouse with an arrow, make sure that it's not a sharp arrow. I made that mistake once.